What is up, team? We are so back. For today's episode, we're going to be chatting about the NVIDIA earnings, obviously the biggest news item of the day if you've been following the channel. We're going to talk about, is this just another dot-com bubble forming, or is the AI bubble different than that? We'll chat about why all these companies are trying to build data centers, what data centers actually are, and then how they expect to profit off the data centers. And then we'll chat about, with the news tomorrow, with the non-farm payroll report coming out, where's the opportunity in the market? Where's the short-term opportunity that I believe, and where's going to be the long-term opportunity? So we'll get into some stock names at the end of it as well. So for those of you who don't know me, I am Chris. This is Blomonomics, and if you're watching this, you are, whether you like it or not, a Blomonom economist. We'll get right into it where we kind of left off in the last videos. So 3 weeks ago, we had this big red candle, and we have been holding on for dear life to not close below the wick of that candle 3 weeks ago. And today we just held on at the end of the market close. Since the market close, NVIDIA announced their earnings. So we have the NVIDIA on the daily chart here as just a 1 day. Since earnings in the aftermarket, NVIDIA is already up 5.23%. So spoiler alert, NVIDIA earnings were absolutely insane. Like 85% of people thought that was going to be the consensus, and which it was. Michael Burry decided to short NVIDIA and Palantir, and so he might be regretting that decision right now. But long story short, NVIDIA just blew every earning category out of the water again, and we'll actually get into those in a little bit of detail right now. Before we do, what has this had, or what effect has this had on the broader market here? So you see NVIDIA is up 5.8% after the market closed. This is basically the whole Mag 7 here. Apple's up, Tesla's up, Google's up, Meta's up, Microsoft's up. Everything is the whole tech sector is up since the market closed. In fact, the QQQ, the NASDAQ, is up about 1.5%, as well as the S&P 500 is up around 1%. So the earnings were a massive breath of fresh air that the market needed as we were, seeing a bit of a downturn forming over the last few weeks. Now the question is this going to be sustainable? We have the big news announcement tomorrow, reporting the net jobs either created or lost in the US for the month of September. We're still not going to see October's numbers. And right now as well, if you've been following along, you can go to cmegroup.com. This just shows you the market's expectation of a possible Fed rate cut on the December 10th meeting. Why do we care about this? The more likely they are to cut rates, the more bullish it is for the market. So this was at 90% a couple weeks ago. It's since now dropped. The market's priced in that there's about a 30% chance the Fed is going to cut rates. That's why we've also seen the whole market kind of drop down now, is because this is less bullish for the market. So the news tomorrow could either drop this down to a lower percentage or could spike this back up, which we'd see a pretty sizable rally in the market. So yeah, just a heads up there. We still have that big news announcement tomorrow, but NVIDIA earnings were off the charts. For those interested, we can quickly go through the earnings here. So I know this looks intimidating when you first look at it. We'll make sense of this in like 2 minutes and just give you a better understanding of how to read the income statements and these earning reports. First thing you need to look at is, what does GAAP mean versus non-GAAP? GAAP stands for Generally Accepted Accounting Principles, meaning this is sort of like the market standard right here on how you do accounting. Non-GAAP basically means essentially the company can write their own kind of financials, their own accounting, and what this does is it kind of removes the weird stuff from the quarter. If there was like weird one-time expenses and stuff that they were in. So basically the only difference here is like NVIDIA is saying they spent a little less money on true operating expenses than what their actual report says here. So there's not really a huge difference, but just to give you an idea, you're going to see both numbers. We're going to go over GAAP. That's the one that we're going to focus on. So long story short, this you're looking at last year's Q3. We're looking at last quarter in the summer, and this is this year's Q3. So they were at 35 million last year. They were at 57 million this year. So they went up in revenue 62%. Like, that is massive, massive gains. They were up last quarter 55%. So they're still growing like faster and faster and faster and larger every single quarter. Net operating or net income right here, 31 million in profit, which is up 65% year over year, as well as it's up 21% quarter over quarter. Long story short, they're making a ton more money this quarter than they were last year. They're making a ton more money this quarter than they were even last quarter. So the question is, like, is this sustainable and why? So if you've probably heard the term like data center. What is a data center? So essentially it is think of a giant warehouse that would have like AWS servers in it to host, just like internet servers, gaming servers, just data. Whereas what these do are they're basically loaded with GPUs. They have to be like water cooled. They suck up a ton of energy, and they're being used to train AI models. And so why there's such a big race right now with these companies to build these data centers, they're literally pumping in tens of billions of dollars and investing in these chips and these sets to build them. And when I say they, it's like the Mag 7, Apple, NVIDIA, or not NVIDIA, Microsoft, Google, Meta, and so on. They're just trying to build these data centers. So why are they trying to build them, and how is this different than the sort of early 2000s internet bubble that burst? Because people keep speculating that we are in a bubble, that we're at all-time highs, the stock market is at all-time highs. Is this bubble going to pop? If the bubble does pop, it will not be due to the earnings and the performance of these companies. Back in 1999, 2000, the internet companies weren't actually making money. It was just concept. We knew the internet was going to be the next big thing, but they weren't even profitable. They didn't have earnings. They were spending a ton of money. They were kind of like promising and not profiting. Whereas the difference between what happened then and what's happening now with these companies is we've now seen the entire Mag 7 report for their Q2 earnings or Q3 earnings. Every single one of them was great. Meta had a one-time tax fee that they had to pay, which dropped it down. Long story short, Microsoft, Google, Apple, Tesla, like these companies are all making a ton of money right now. They are real businesses. They're earning real cash. The cash is growing. They're growing their businesses. NVIDIA is now forecasted that they're going to be at 65 billion next quarter. So they were at 46 2 quarters ago, 57 this quarter. They're now forecasting for Q4 they're going to be at 65 billion. The growth is insane. So the question is, like, why is there this race to create these data centers? And this is going to help us kind of formulate where we want to put our money in the long run and where the opportunity is in the short run. Realistically, if you've heard the term agentic AI, is what a lot of these companies are trying to build. That would be AI that actually does sort of entry-level tasks. Things like, if you imagine you're a small business owner and you buy Office 365, or you have the Google workspace for your company, and then you have an embedded AI accountant that you can pay for monthly or yearly, that you can just take pictures of your receipts, and you will use optical character recognition. It'll read the receipts. It'll be able to do your full scale accounting for you, and you can replace a person in your business now with like a low level AI. Things like that. So that's agentic AI. These companies are going to be able to learn about your behaviors, like your spending behaviors, your shopping behaviors online, and cater ads even more specifically to you. So companies that do advertise are going to pay a lot for, AI or, AI assisted advertising, so that they know that if they're putting an ad in front of you, there's a realistic chance you might actually buy this. You could have AI travel agents. You can have AI assistants through your Google Suite, Microsoft Suite, and so on. And so there's a lot of money to be made from this. You think about Google right now, like going back to that accounting example, Google doesn't sell accounting services necessarily to the broader market, and that's probably a multi-billion-dollar industry. Imagine they can now take a piece of that pie and bring it in-house. So these tech companies are going to be able to start doing or issuing out digital employees, like renting out digital employees to companies, which is going to make a ton of money. It's going to completely change the landscape of the job market. It's going to change the landscape of how we make money. So this is why it's hyper important right now. And that can sound scary, like all our jobs are going to be replaced. I don't think that's necessarily the case. I actually work in AI. I don't think that's necessarily going to be the case, at least not right away, but there's no time more important than now to start building wealth, and more so than just building wealth in digital numbers in our trading accounts and our investing accounts, to really own assets, to own hard assets. I believe that the folks that own hard assets into the future and just never sell them and hold on to them are going to be increasingly wealthy, especially with the money supply being created. So all of that being said, or money supply being expanded, all of that being said, where is the opportunity for the short term or the long term? In the long term, I think you're probably safe investing in the Mag 7. They're only going to keep growing because they're the only ones who can afford to build these massive data centers. They're the ones who are going to be able to put all the research and development into these agentic AI and the advertising AI, and lease all of that equipment or all of that IP out. And so I'm like a big one on getting deals. I hate overpaying for anything. I love getting a good deal. And I didn't invest in NVIDIA in 2020 and 2021 and 2022 because I was like, oh, well, I'll just get a better price on it. I did have a pullback and I did get in, but even ever since then, I've now just been dollar cost averaging in, because these companies are just going to keep growing. Google's just going to continue getting bigger. I know we wish we could have invested in Google back in 2007, but now we're in 2026 almost, and we're gonna look back 20 years from now and say, I wish I could have invested in Google in 2027. And so I do believe in actually Berkshire Hathaway, Warren Buffett's company, just took a position in Google as well. So even these big sort of legacy investment firms that only invest in the tried and true cash producing companies are now moving into tech as well, because it just is going to be such a big part of our future. So getting into it, in the long run, dollar cost averaging into, take your pick here, or an ETF that includes all of these, are probably a really good idea. In the short term, where's the opportunity? So when we go to Google Finance here, I created a portfolio called Quantum. I think after AI, the next big thing is going to be quantum computing, like kind of forward thinking the next 5 to 15 years. We've already seen the market price that in this year. So if we go to like D-Wave here, we go to the 1 year chart, it's up 1,300% this year already. Oops, we go to, let me get back to the list. This one's like Ionic or IonQ here, up 65% on the year. QUBT, quantum computing, up 214% on the year. Rigetti Computing up 1,700% on the year, and so on. Poet, this is like a kind of small Canadian company, up 8% on the year. It's had a big pullback. But what you can see is people are already starting to invest in quantum, and none of these companies are profitable. These companies, they're all speculative tech stocks right now. So where I see a big opportunity is the next time we do have a market crash. Typically they happen once every 5 or 10 years. I would say there'd be a really good opportunity to get into these companies at a discount and then ride that wave up, as this could be the next big thing. Right now, if you go into these stocks here, if you copy this list and look at the last month, these companies have taken a beating in the last month, because in the last month, like we showed in the SPX, the last 4-week candles here have been quite red. The SPX dropped to where we are today, 4%, and you can see D-Wave dropped 31%, like almost over 7 times the amount that the S&P 500 dropped. Same thing here with Qubit. Let's take a look. Where is that? Qubit last month down 33%. Ionic last month down 20%. Rigetti last month down 41%. You're starting to get the gist here. Poet last month. So they all kind of ride the same way, 44%. If you were following my trades, you might actually be in on the strangle that we did on Qubits here. If the market does rally, if the news comes out tomorrow, the NFP report, and that is at 8:30 a.m. Eastern, 5:30 a.m. Pacific, when that news gets released, and if it is positive for the market, if there's more of a likelihood, the jobs market's not too bad, and there's a likelihood that we still could see rate cuts in December, I would expect to see a big rally in this sector. Not for long-term investing, But if you want to swing trade something, if you catch the news tomorrow and the market starts spiking up, there could be opportunity here. So invest at your own risk, a small portion of your portfolio. I'm not a financial advisor. This is not financial advice. But this whole sector, the whole quantum sector, has been really beat up over the last month. And we're down, anywhere from 30 to 44%. So if we rally even back up to where we were, there could be 30 to 44% gains in there. Even if we got halfway there, you're looking at 15 to 20% gains. So that's where I would look for a swing trade tomorrow. You can copy this list if you want to explore that option. Long term, any of these Mag 7 stocks, at this point, they're only going to keep snowballing out of control because they're the only ones who can afford data centers, and those data centers are going to continue to create agentic AI or start to create agentic AI that's going to be leased out into the market. These companies are going to be highly profitable for a long, long time. We're buying at all-time highs. You might want to wait for the dips like we just had to sort of dollar cost average into these, but again, the proof is in the pudding here, and like these companies are just making so much money that they're just carrying the entire stock market right now. When you hear the term breadth in the stock market, there's not a lot of it right now, which, you look at how many of the 500 S&P 500 companies are profitable, or the stock is outperforming, their 50-day moving average versus underperforming the 50-day moving average and so on. And the breadth isn't good because the tech sector is just carrying everything else. Now, when we do start to see a pullback, if there are cracks in the economy, if the job market is not as strong or continues to weaken, I guess, we could see a pullback on some of the investment into tech, at least from investors, and we could see that spread out into some of the more recession-proof sectors, which would be healthcare and consumer staples. So keep an eye on that. And if we do see a big boom here in tech, if this kind of revitalizes a big boom in the tech and the stock market, and we see it, surpass all-time highs here in the next month or 2 months, and kind of, like we said, seasonality-wise, the best time for the markets is November to April. It might be a time to start taking some of the profits that you make off this sector, and then starting to get ahead of the curve and positioning those into, like I just said, their healthcare and consumer staples, because this bull market can't also go on forever. There at some point will be a big pullback, and the positions, the people, the smart money who position in those other sectors earlier are gonna, weather that storm a little better. So long story short, we might want to start thinking about diversifying. So in summary here, NVIDIA, insane earnings. These companies, Mag 7, are just going to continue booming. Quantum stocks have been slammed really hard in the last month. There might be some opportunity for some swing trades in there coming into the end of the year here and into the spring if we start to see some rate cuts and the market kind of get bullish again. That being said, there's still a chance that NVIDIA earnings and the Mag 7 earnings over the last couple weeks here isn't enough to prop the stock market up, and we could still see a pullback here. We were on the daily chart at the 50-day moving average, this orange bar here. We could still see a pullback down to the purple, which would be from where we are today. Another like 5% pullback, I think, is the alternative to us, kind of having another big rally, is that 5% pullback. And then at that point, I think the market is quite undervalued, and you're going to see a lot of investors buying that dip kind of heading into the new year. So we could go out that direction, just manage your risk appropriately. That being said, there's some pretty good opportunity out there, and there's always abundance in the market. We just have to be smart enough to go find it. Last thing is, thank you all of you for commenting on the last video. You all have entries into the silver draw. I did not post yesterday, so this video counts as 2. So everyone who comments on this video gets 2 entries into winning the 1 ounce silver Canadian maple, 99.99% pure silver. And then comment on my videos. Tomorrow we're going to discuss the NFP report. Friday there's also the consumer price index report, the CPI report that's coming out, so we're going to discuss that and what that means to the market. And then Saturday we're going to spend the bulk of that video just having the draw for the silver and kind of doing a week recap here. So appreciate you all. Thank you so much, and we'll talk soon.